All right, Vicky, I think we're seeing some reaction to these new tariffs in the markets right now, the threat of also potentially additional tariffs against Asian nations. What's your word of the day for investors?
It's composure. There is so much news flying back and forth. You kind of just need to sit a little bit still and let this marinate. We call it not pre-panicking, right? So all of these new steel and aluminum tariffs, they're coming in March, but there's a lot that can change between now and March. It feels like that'll be eons and decades between now and March 12th. And so for me, it's sometimes you need to step back, let this develop. Don't panic, knee-jerk sell or buy things just because one announcement was made, because there are many announcements that have been made on trade and tariffs, and they are likely going to continue to develop because we know he loves to use maximum power. He loves to use this as a negotiating tool. So I just caution everybody, step back, take a deep breath, and don't pre-panic about anything.
All right, so we don't want to pre-panic about anything, but do we want to pay close attention to what Jay Powell has to say and make any moves in response? Obviously, there are going to be a lot of questions about his view on some of these tariffs and some of these other shifts when it comes to trade and economic policy. How do you think that investors should read what he says today, or what you expect him to say today, at least?
I think I expect him to be very open-ended, that they're going to be data dependent, that they're going to be independent. I think he's going to fiercely defend the Fed's role and the Fed's need to remain independent from the executive branch. You know, I think I've been actually very impressed on how he's handled some of the pressures thrown at him, but I don't think he's going to say definitively, oh, we're going to tilt hawkish or dovish. I think they're going to talk about risks to the labor market. They're going to talk about risks to inflation with tariffs. But again, as they said at their last press conference, until we have more details on exactly what these tariffs are, it's very difficult for them to model out. So I think, again, the Fed's going to kind of stay and wait and see where these data trends lead, because it could be inflationary or you could have labor problems. But right now, there are a lot of what ifs and not a lot of actual data saying, hey, this is what's occurring in the markets beyond like eggs being very expensive. Obviously, that's a trend we're all aware of right now.
I'm very much aware of that one. We had Dan Ives from Wedbush on the show earlier. He says right now is the software era when it comes to the AI trade. I know you have a pick for us today as well, focused on that AI trade. What is your pick for us today and why?
It's Quanta Resources. It's a little bit lesser known name. It's more on the AI infrastructure, and they got hammered on DeepSeek Day, right? They were down 18%. They're still down about 13% from their all-time highs, but I love this play. Even if you took out the data center AI play, which I don't think is valid, you still have so much growth because our grid is so old. We built all of this stuff in the 60s and 70s. We're having to rebuild it. We're having to harden power lines. We're having to bury power lines. We're having actual increases in demands for power outside of data centers. But also look at what all the mega cap said today, or this week, I'm sorry, regarding earnings. $325 billion in capex between Meta, Google, Amazon, and Microsoft. There is there's going to be no problems building data centers. There's so much demand for it. So I don't think the fall it took after DeepSeek is valid. So for me, I love this play still on supporting AI.
All right, you have a couple other picks for us. Quanta Services is your main pick. We're just showing the chart right there. You're also bullish on Meta. We were just talking about it earlier in the show on a 16-day win streak. Your take on that?
Yeah, it's hard to bet against it, right? It's almost like roulette coming up red 16 times in a row. You just got to keep rolling with the hot hand. But look, they're the company that is actually implementing AI to drive revenues further. And I love that because they're getting better response from their ad rates. Their revenue is all ad-based, but they continue to expand. So they have Reels, they've got Threads, they've got Instagram, they've got all of these different platforms, and they're doing a better job of getting and monetizing ads, and they're keeping their advertisers extremely happy. So for me, I look at this and say, what companies implementing AI to drive better revenues? And to me, that's Meta.